Hello, everyone, and welcome to MIT Sloan Alumni Online, where every month, MIT Sloan Alumni Online brings you the latest breaking news, cutting-edge research, groundbreaking ideas, and school updates from MIT Sloan faculty and alumni. I should also say happy Halloween to our viewers. Today, we have Clara Brenner, MBA, class of 2012, joining us. Clara is the co-founder and managing partner of the Urban Innovation Fund, a venture capital firm that invests in the future of cities. The fund provides seed capital and regulatory support to entrepreneurs that are solving our toughest urban challenges and helping them grow into tomorrow's most valued companies. Previously, she co-founded Tumml, a startup hub for urban tech. The organization has provided 38 startups with seed funding and mentorship and hosts thought leadership events around urban innovation. In 2014, Forbes listed her as one of its 30 under 30 for social entrepreneurship, and Clara's work energizing urban entrepreneurship has been featured in numerous press outlets, including MSNBC and TechCrunch, among others. She serves on the Board of Tumml, as well as the Local Initiatives Support Corporation Bay Area Local Advisory Committee. Clara earned her MBA from MIT Sloan and a BA from NYU. We're so glad to have her with us today. Clara, I'll go ahead and turn it over to you.
Well, hi, everybody. Thanks for having me. My name is Clara. I'm a co-founder and managing partner with the Urban Innovation Fund. We're a VC fund based in San Francisco. We invest in startups shaping the future of cities. And by that, I mean that we provide seed capital and regulatory support to startups tackling tough urban challenges. We provide both the early stage capital at both the pre-seed and seed stage, as well as political and regulatory support. And my goal here today is just to kind of talk through how my co-founder Julie and I went from Sloanie's class of 2012 to what we're doing today, and maybe dive in a little bit into what we mean when we say we invest in urban. So my goals really are just to walk through how we built our investment thesis, talk through some urban sectors and deals we get excited about, share some case studies, and end with just a little discussion of how we think about tracking the real world urban outcomes that our companies are having, hopefully. And then I'll just turn it over to Q&A if that sounds good. So how we built our investment thesis. Well, that's me and that's Julie. We are the co-founders and managing partners of the Urban Innovation Fund. But we actually met, I guess, about 9 years ago now when we were Sloanies. Julie's background's in political polling and political consulting, and my background's in commercial real estate development. And we both went back to Sloan because we thought we were going to start companies in our respective fields. But we both had what I think we would agree were transformative experiences working for startups between our first and second year at Sloan. So Julie went to go work for what was then a really little company, is now a really big company called Revolution Foods. They're a healthy school meal provider based out here in California. Now I think they do something like 300 million in annual revenue, so they're really big. And I was a really early employee at a company called Fundraising, which essentially is like a betterment type product, but for private real estate assets. So whether you're an accredited investor or a non-accredited investor, you can invest in a basket of real estate assets in a way that's typically not available to everyday retail investors. They've gone on to raise about $50 million, so they're pretty big as well. And this was right around the time that companies like Lyft and Airbnb were just getting off the ground. And we felt like they had something in common with the places where we had been working. They were all solving really interesting community challenges in cities, and at the same time they were scaling in ways you just don't typically see community organizations do. So like any good grad students, we embarked on a research study of what we started calling urban innovators. So companies using technology to make urban living better. And ultimately we found that even though these companies are operating in a variety of different industry verticals, they have a lot in common. Most notably, two things. The first is that they oftentimes have a lot of trouble raising early stage capital. A lot of them have a physical component to what they do. So like Revolution Foods, you need a physical culinary center on day one. For for Fundrise, we bought a building really early on in the process. Maybe your bike share system, you need a fleet of bikes. But you could also just be operating in some kind of a new economy or sharing economy type space where there just really isn't a precedent for your business model. And so more traditional institutional investors could get excited about you, but they kind of want to see that you have a little traction before they're going to take a risk on you. So, that's big challenge number one. Big challenge number two is that pretty much across the board, these companies face pretty significant regulatory and political hurdles as they look to scale. So Revolution Foods, you're selling into highly regulated, highly unionized school districts. You're that bike share system, you need public space permits. If you're a Lyft or Uber, you're seemingly breaking every law in the world. There's just a certain level to which you have to engage in order to be successful. And certainly there are different perspectives on what engagement means, but one way or the other, you're going to have to do it. And when we were graduating, we kind of surveyed the investor landscape, and it was pretty clear to us that no one was investing in these companies in a concerted manner, and they definitely were not giving them good regulatory and political advice. So we decided we were going to do it. So it started with an accelerator that we launched right after graduation, using our research as kind of the basis of our work. It was called Tumml. We incubated 38 companies out of our offices, and some interesting stats. 70% of those companies have a woman or person of color on the founding team. They were tackling problems, everywhere from transportation to energy and water, and everything in between. But it was a really great experience, and it's really what gave us the credibility to go and launch a more traditional venture capital firm in 2016. So it's called the Urban Innovation Fund. We're a very vanilla, traditionally structured venture fund, but our goal is to back companies that are solving really interesting and important urban challenges. And really underpinning all of our investing work is an understanding that 82% of Americans now live in cities. That number is going to continue to grow. 2/3 of the world's population is going to be living in and around cities by 2050. This is causing some really massive challenges, and represents what we think is a really exciting opportunity, because ultimately we're going to need some tremendous technological game changers in order to help address some of these challenges. And when we think about the areas that we look to invest, we've created a framework of really 9 areas that we think are kind of relevant to us. So those are, here, anything from energy resources and sustainability to transportation, education and workforce, health and public safety. When we say urban, we really mean companies that are tackling the kinds of problems that mayor's offices across the country really care about. And when we think about, drilling down more deeply, like within those sectors, what are the kind of deals that we get excited about? They kind of fall into 2 buckets. So the first are those high profile deals in kind of hot areas like transportation, where they're facing a lot of regulatory and political pushback, and where, our resources and assistance around these regulatory and political issues can be a real value add and actually help us fight our way into competitive deals. The other type of deal we get excited about is in, undervalued or unsexy areas like water or workforce, where, our interest in urban, our attention to the sectors in the space mean that we can recognize value really early, maybe before our peer investors really understand, and where we can then help position these companies for really marquee follow-on investment. I should note we see a lot of geographic diversity in terms of the deals that we see. So for Fund 1, I think we've seen well over 4,000 deals. And that means, one, we have a less than 1% funding rate, but these deals are coming from all across the country. So about 2/3 of the deals we look at come from outside of the Bay Area. Our general perspective is that, no city or region has a monopoly on good urban ideas. And ultimately, it's going to need to work just as well in Boston as Richmond, Virginia, as San Antonio, as San Francisco. We're looking for venture scale businesses. So where they're based doesn't really matter to us. We also see a lot of demographic diversity. So for Urban Innovation Fund, we've done 23 investments so far out of this current fund, and about 70% of those companies have a woman or person of color on the founding team. So it's been really consistent throughout all of our work to date. Just to give you some examples of the kinds of companies we invest in, a good example is Apana. They're essentially a hardware and software solution for large commercial and industrial real estate holders who have big water bills. It's kind of a mouthful, but they work with companies like Costco. So they're installed in every Costco in North America. They've helped them reduce their water use by 22%. We got involved in part of their first ever external round of funding. They've gone on to raise a Series B that was led by Corita Water Systems. They're a really cool company based in Washington State. Another good example is Catch. They're a personal benefits platform for the future of work. They're applicable to all different types of workers, but they've had particular early traction with gig economy workers, so 1099 type workers who aren't getting any benefits through their employer. So you can go to the platform and say, you know, I'm a Lyft driver and a hairdresser, and it will help you estimate and pay your quarterly taxes, and then buy, shop for, and manage all in one place products like health insurance, life insurance, saving for retirement. The big one for gig economy workers is paid leave. So like if you're a Lyft driver and your kid is sick and you can't drive for that week, you don't get paid for that week. And that's potentially devastating in a country where many, many Americans can't even come up with $500 under an emergency situation. And so Catch is a product that essentially helps you plan for and save for those types of life events. We got involved as their first external funder ever. And they, right after we invested, got into Y Combinator, which is a pretty prominent accelerator. They went on to raise a $5.1 million seed round that was led by Khosla. And we're just really excited about this company, and they're based in Boston. Another company actually also based in Boston is a company called Votes. They're a mobile voting platform that's built on the blockchain. So when you think about what's wrong with voting, you usually think about two things. You know, one, people don't do it. And two, there's some very legitimate concerns about security. And so the idea behind Votes is that if you can empower people to vote on their phone, many more people are likely to do it. And if you can record those votes on the blockchain, it's really easy to monitor and audit those elections. We got involved with Votes as their, part of their, I guess we were their first external institutional investor. They've gone on to do the first US federal election that was mobile enabled. And they've done a lot of really interesting municipal elections in places like Denver. We're so excited about this company. They've gone on to raise a Series A that was led by Techstars Ventures. They're a really cool company. And just one more example, this is a company called Stork. They're a breast milk shipping company. We actually heard about them from a lot of our business school peers. So when we first moved out to California, we had a lot of friends who were working in industries like banking and consulting. They're traveling a lot. And as our friends started to become parents, a lot of them were hauling around literally like a beer cooler full of ice when they were coming out to visit in San Francisco because they were committed to breastfeeding. And they had to find a way to store the milk when they were away from their children. This was embarrassing, expensive. It's very hard to explain to your boss or your client why you have a beer cooler at a business meeting. And then all of a sudden they all started using this product called Stork, and they were raving about it. So we ended up learning about it from the founder and convincing her to raise a small pre-seed round. They've 6x their revenue since we first invested. Essentially how it works is that you say, I have to go to San Francisco for 2 days. You go to your company portal, you put in your information. When you get there, this delightful kit is waiting for you. You can pump your breast milk, put it in the kit, it chills it, it overnights at home, and then your company pays for it or your insurance will cover it. You can also just pay for it yourself. So a lot of moms who work at companies where they haven't officially adopted Stork, they'll use this product and then submit it as a reimbursable expense, or just use it, if you're going to, say, a wedding over the weekend. They've grown tremendously, and their big vision is to become that really trusted brand for working moms. And we just love them. So those are some examples. I'll just kind of dive into talking a little bit about what we mean when we measure our work. So when we first graduated from Sloan, really from day one, we've been committed to trying to quantify the work that our companies are doing in cities. Are they really using technology to make urban living better? And how do we measure that? When we started, we figured we would use one of the many tools that exist in the market to measure impact and outcomes in some way. We actually started with the B Lab impact assessment, and it was a total failure because it asked a lot of questions that weren't relevant to us as investors, to our companies, as operators, and just generally it was a kind of a pain in the ass to do. And a lot of our companies failed, frankly, because it asked questions like, what's your carbon footprint? And the answer is 2 laptops. It just wasn't really relevant for us, and it was extremely onerous. And so ultimately we ended up creating our own outcomes report. This is a little screenshot of our 2018 report. I actually just finished our 2019 report yesterday. But essentially once a year, we survey our portfolio companies. We ask them about the demographics of their team, the demographics of their board, what kind of jobs are they creating, full-time, part-time, what kind of benefits come with those jobs. And then we usually pick about 3 statistics that are relevant specifically and only to that business that they're tracking already, and that we can use as kind of year-over-year metrics to kind of monitor what they're doing. And our goal there is not to pick things that are new, but really metrics that are core to their business. And if they're doing well in those metrics, they're doing well, hopefully, as a business. So how many gallons of water have you helped your clients conserve? How many liters of breast milk have you shipped? Things like that. And ultimately we compile it into a report and issue it to our investors once a year. It includes longer form case studies, snapshot statistics of all of our companies, as well as some aggregated stats, because we found that our LPs really like aggregated stats. So we can say things like, 78% of our companies have a woman or person of color on their board of directors, which is a really unique statistic and one we're really proud of. So maybe I'll just pause there. I've been talking probably for long enough, and I would love to take any questions you might have.
Great, thank you, Clara. So as a reminder to our participants, you can type in your questions in the Q&A panel in the Zoom interface. And while you're doing that, I'll take a moment to tell you a little bit about some virtual events coming up from our partners on campus. So coming up in November, the MIT Alumni Association will be hosting a webinar with alumnus Ari Daniel, PhD, 2008. Ari is a scientist turned journalist who will share his expertise in utilizing storytelling in communicating science topics with a broad audience. And then on November 7th, MIT Sloan Management Review will host a webinar on the state of artificial intelligence applied to the field of healthcare. Speakers will share how their organization has used AI and machine learning to combat drug misuse in the field. So information on registering for those sessions is available online from the MIT Alumni Association and from MIT Sloan Management Review. And so with that, we'll get started with our questions. So Clara, you spoke about the great work that you're doing in the world, and certainly it's something that aligns well with the Sloan School mission to innovate and make the world a better place. And so we're really proud of that and proud of you and Julie for your work. So maybe if you could say a little bit more about how the MBA at Sloan helped you get started with Tumml.
Sure. I mean, Julie always joked that she basically paid $150,000 to meet me, which is only half joking. But, I think in many ways, Sloan really helped us set off on the path that we're on now. Ultimately, I think, people say, oh, you're so lucky, Julie's your best friend and she's your co-founder and things seem to be going well. Like, that's so lucky. And I always correct them and say, we actually had a lot of opportunities to work together before we ever started a company together. We started off taking classes together and working on a number of consulting projects as students at MIT Sloan. We ended up helping found and then ultimately run the MIT Sloan Women in Management Conference our second year. We'd done all this research together. We then started Tumml. And so now here we are with a fund, like we've had many, many touch points along the way that have helped us kind of confirm that we really did want to work together. And so much of that really happened while we were at Sloan. And so I would say, it was a really good opportunity to experiment and really test out a co-foundership before really diving in. And that's, I think, the best thing that came out of our Sloan experience, which was awesome.
Great, thank you. One question that has come in from our viewers If you could say a little bit more on the role you see of public and private partnerships playing in kind of reinvesting in cities, how you grapple with that.
Yeah,
your work.
I would say that ultimately the vast majority of improvement and changes that we need to see in cities are not going to come from startups, and I think the same is true in public-private partnerships. Those types of partnerships, I think, will be critical to the future of our cities and delivering, meaningful improvements to things like infrastructure. But ultimately, like early stage tech startups are not usually well suited for those types of arrangements. They can take years. They are incredibly legally complicated to set up, and ultimately, we do have companies that sell to government, but those tend to be few and far between. And if they are, they're usually looking at multiple revenue streams. So like Votes, for example, is selling to, the Massachusetts Republican Party and the Utah caucuses, but they're also selling on university campuses. They have aspirations to do corporate shareholder voting, participatory type budgeting. I think having a little bit of revenue diversification is really important at the early stage, and relying on a government partner who could be great in the long term is not usually a good fit for early stage companies. So while I do absolutely recognize the value of public-private partnerships, we don't see them a lot in our fund.
Great, thank you. So we have some questions, I'll group them together a little bit, but thinking about investment outside of the US, has the Urban Innovation Fund explored that at this time, or are you mostly focused on domestic?
We're really focused on North America. So companies that are based in North America and that see North America as at least one of their initial target markets. For us, it's both our passion area as well as ultimately where we can deliver the most value. I mean, we're really looking to help our companies think through a lot of these strategic issues, regulatory, political issues, and there's only so much bandwidth we have to kind of support companies outside of these jurisdictions. Additionally, like we're a small team, we're a team of 3. And so the time zones alone make it pretty challenging even within the US. And so we really determined that North America is going to be our focus for the time being and into the foreseeable future. But I would say, never say never. I think we really want to be open-minded and thoughtful about where we find the best deals, because ultimately, we're looking for the best companies in the world to invest in.
Thank you. So one question that has come in goes back to Tumml a little bit. And so you mentioned that your experience in founding that organization was key for building a track record. So what was the fundraising process like, and what were the main challenges you faced? And then lastly, did your investment thesis evolve along the way?
Oh, it was really tough. But I think we felt really lucky in that we had research behind us. We had something to point to say, like, we're not just making this up. This is, tangible representation of our thesis. And ultimately, we took our research to Blackstone, which through their charitable foundation had a short-lived program to support kind of new types of entrepreneurship in the US. And so they, along with a number of other groups like Omidyar Network, backed us to launch Tumml. It was an interesting process. We ended up structuring ourselves as a nonprofit just because I think our research was so new. Our theories around these issues were really new. Like now people talk about urban and it seems pretty well understood. At the time, honestly, people did not understand what we were talking about at all. And it was a real slog to raise that capital, but ultimately being able to build an accelerator and show that we could source really interesting companies in the urban space really helped us build that credibility that we needed to ultimately launch a venture fund. I don't think we could have launched the Urban Innovation Fund right after school. And honestly, I'm glad we didn't, because we learned so much about the urban space and what sectors are really good for us, and how we wanted to work with companies. It was a really informative experience, and I'm really glad that we did it.
Yep, the learning by doing. There's no substitute. So you mentioned the research along the way, and so a question came in about data. What's the biggest data gap that you see in this work, or the challenge you face in collecting data and assessing it?
Honestly, it's not a huge challenge for us now. I think certain companies need a lot of data in order to operate, but I think especially in the urban space, it's kind of like there's a lot of thinking about doing stuff like if only we had enough data to prove that, bike lanes were safer. And it's like, no, we know bike lanes are safer. You should just do it. There's a certain, I think, safety that comes from having more numbers to validate. But I think especially if you're talking about early stage tech companies, you just have to do it. And the data frankly comes later, typically. And so I think there is a really big push and pull because ultimately you do want to validate your work over time. But for really early stage businesses, like we're getting involved oftentimes at the pre-seed, companies that have just launched a pilot, for example. And so ultimately we definitely want to see that our companies are being thoughtful and the founders have done their research before launching a business, but ultimately kind of the proof is in the pudding, if you will.
Thank you. So another question has come in. Can you tell us more about your investors and maybe what has been the response to the mission aspects of the Urban Innovation Fund?
Yeah, so 82% of our capital come from institutional investors. I should say Fund 1 is 24.5 million US dollars, and 82% of our capitals come from institutional investors. These are folks like a hospital system, an insurance company, number of foundation endowments, and I would describe our investors almost to a person as impact curious. They're investing out of their endowments, their corpuses, like first and foremost, and very explicitly, they're pursuing market rate returns, but they're interested in kind of aligning their investment practices a little bit more closely with their organizational objectives. So you're seeing, hospital systems not wanting to have their endowments investing in oil and gas companies when they have little kids coming into their emergency room with air-related, asthma issues. These types of conversations, I think, are relatively new for larger institutional investors, but they are happening. And I think we kind of fit that niche really nicely in that we are a market rate fund, but we are very committed to investing in companies that are doing good things for cities. And we're very able to quantify the work that our companies are doing. And we have a very sort of immediate and obvious relevance and sort of mission. And, we can track things like the demographics of the founding team. And, we have a level of diversity that you just don't see in most venture funds. And so we kind of fit kind of squarely in the middle. And I would say that's still pretty new and most investors still don't fit in that bucket, but we are seeing more and more investors, and it really helps us and validate us to have such sort of very traditional vanilla partners behind us.
Thank you. So shifting gears a little bit, one of the questions that has come in relates to climate change and resiliency. So what trends do you see in companies that are developing tech and programs to address that, either within your work with the Urban Innovation Fund, or are there others out there that you're seeing that are really interesting and compelling?
Resiliency is so hot right now. I feel like every couple of years there's like a hot topic, and resiliency feels like one of those topics right now, at least within urban planning circles. At the same time, we don't see a lot of venture scalable opportunities for investment within that area. So much of it is hyper localized. So much of it is ultimately determined by meaningful policy changes and sort of political maneuvering that's critical. And so while we're certainly open to investing in companies in that area, like we see a lot of monitoring of sea level rise, or stormwater management is like the hot thing. I think we've seen probably 20 companies in the stormwater management space, but none of them, from our perspective, have the kind of market size opportunity that aligns with what we're looking for. That doesn't mean it couldn't be a really good company, or that it wouldn't be extremely impactful, or that it isn't an innovative technology. It's just really hard to find those businesses that also are going to deliver, a 10x type return in 5 to 7 years, which is really what we're looking for.
Thank you. So another question relates more to kind of career development, professional development. So what advice would you give to a fellow Sloanie who was looking to break into the venture capital space, or to kind of follow in your footsteps in this type of work?
Yeah, I mean, I would say finding a job in the venture space is really hard. It's very competitive, and most firms, including ours, really operate as apprenticeship type model. So, we have really fantastic associates, or firms have principals that kind of cycle in and out, but there isn't necessarily a ladder up. And so I would say, going to work for one of those firms can be a really amazing learning experience, but ultimately, if you're looking to start your own firm, you're probably going to have to spend some time thinking about a pretty unique thesis. There are so many firms out there, and I think one thing that's allowed us to compete for dollars and get attention from entrepreneurs is that we are really differentiated in basically every single way. And so being able to really spend time honing in on like, what do you think? What is your opinion about the market? Why do you have some unique insight about a particular sector? And ultimately, that's what you're going to need to be, I think, successful in the venture space. And if you're looking to start a company, I would say you should just do it. Like, I talk to Sloanies all the time who, have nice jobs and they think maybe someday I'll start a company, or what do you think about this or that idea? And my general feedback is you need to find something that you're very excited about, and you need to start this company right now. It gets harder and harder every year, as you start to think about getting married or having children or taking care of other family members. The level of responsibility that you're going to have in your life is only going to get bigger. And so I would say start a company now while you can, if that's something that you want to do.
No time like the present. Thank you. So just looking through our questions here. Let's see. So I'm going to piece together maybe two questions that are related to the same thing. But when you're, let's see, I'll just read this one.
Okay.
I really like the mission you described and believe there's a huge potential for bringing more innovation to public sector problems. I'm curious whether you see any trade-off between, quote, public goods and returns. Do you have objective data yet on the types of returns you might reasonably expect compared to a purely financial investment?
Well, first I'll say, like, we are a purely financial fund. Like, ultimately, like, we are looking for market rate, returns. We're looking to deliver top quartile type returns compared to, a benchmark of purely financial funds. And so what we believe is our differentiator is that, we think solving really big and important problems will deliver those returns. Certainly there are funds that don't have that approach, although honestly, there are not that many. But, I think it's funds who are looking to have a trade-off are not going to be able to compete for many dollars. And I think that's one of the inherent tensions. Like, there are lots of really good ideas. People say, like, when are you going to invest in a company that solves homelessness or the housing crisis? And ultimately, we just don't think that's realistic. We think that those are huge, important problems that need to be addressed with concerted political action, policy-related changes, zoning-related changes, and, a general movement, of the American electorate or your local electorate. And that technology can play a role. I think companies like Votes probably are the most impactful in terms of being able to activate members of the local community to, like, show up and say, yes, we do want more dense housing here, or, yes, we do want to, address homelessness in this way or that way. But ultimately, I think, if you're looking to tackle some of these problems in a not market fashion, it's going to be hard for you to raise capital from traditional funds, and that's almost every fund. At the same time, I don't want to undersell or underestimate the importance of government innovation and government action. Like, I really do think so many of these changes have to come from within, and ultimately, like, I wish that more of my peers and more Sloanies thought about going into government specifically for those reasons, because that's the only way you change many of these large issues. But it's a challenge, like, we hear a lot of entrepreneurs who come and pitch, not a lot, some entrepreneurs that come and pitch us with maybe impact first businesses, who say, like, oh, well, there are all of these, impact related investors who we're going to go to, who are going to fund us. And in my head, I'm just thinking, like, who are you talking about? There are very few, and there may be some philanthropically minded entities that profess to invest in this space, but it's like a drop in the bucket. There's so little money that's earmarked for impact right now, and it's certainly growing, but relative to the overall landscape of funding, it's almost nothing. And so I would say it's really hard to start a business, a tech business, if you're not really pursuing market rate returns right now.
Great, thank you. And you mentioned a few times in the presentation that in the companies that you're backing, there are 70% women or people of color on the board or founding team, which is an amazing statistic. So definitely kudos to you and your team on that. It's very exciting. How do you go about outreach, and how do you find companies that align with where you want to be supporting?
It's funny, people say, where do you find women founders or people of color who are founding companies? And I say, like, only when I open my eyes. It's honestly, I don't think it's that hard. I think it's about who you have around your investment team who is looking for these deals. We don't have an explicit mandate to invest in women and people of color. You don't get extra credit for having demographic diversity on your founding team. As we consider a potential investment, we just want to make sure we're seeing as many deals as possible at the top of the funnel, and ultimately that's translated down into diversity in the ultimate portfolio that we've constructed. So we see demographic diversity both at the top of the funnel, those 4,000 plus deals that we saw for Fund 1, as well as down to the ultimate 23 investments that we've made. And I think that's the best way to make sure you're finding, one, the best deals, and two, you're getting as much diversity as possible. It's just making sure you're seeing every possible deal. We have a super robust CRM system. We track every deal that comes across our desk, whether we get an inbound email or a tweet, whether we meet with an entrepreneur. It helps us in terms of our market analysis. And it also just makes sure that we're seeing as much as we can. Certainly, I'm sure we're missing a lot of really good deals, but we want, to the best of our ability, to see everything, both to inform our decision-making and also hopefully to find these great entrepreneurs before everybody else does. And so we just have a general perspective, within our firm. We always say, like, when people are looking right, we should be looking left. We want to make sure we're seeing everybody before other really smart investors find them.
Great, that's such a good message. And I love the line you just used, that we just have to open our eyes. So that's great, thank you. So a few more questions, and then maybe we can wrap up. But so one that has come in, as a seed fund, what do you do to help attract later stage investors? How do you plan for exits?
Oh, it's such a good question. It's like one of the most important things that we do. A huge priority for us is finding very early stage companies and helping them, position themselves for really marquee follow-on investment from very traditional firms. One, because it's a great validator, especially for businesses in kind of new or unusual sectors like mobile voting. But also because there are these life cycle funds that can step in and kind of shepherd companies through multiple stages of growth in a way that we as a seed fund are really not structured to do. And ultimately, the way you build those relationships with these larger firms is just getting to know them. We just spend a lot of time networking with other firms and delivering value, showing them our awesome portfolio. And it takes a lot of time, but it's like one of the most important things I think seed investors need to do in order to make sure their portfolio is successful. Because you may have the best team in the world with the best idea and real meaningful traction, but if they can't raise a really excellent follow-on investment, more likely than not, most tech startups will die. And so it's so important.
Okay, thanks, Clara. So one last question to round us out. So what are you most excited about right now, or kind of what's on the horizon for the Urban Innovation Fund?
Yeah, I mean, we are excited to continue investing. I think for us, we try not to be prescriptive in terms of the sectors, like, oh, you know what, we really want to see X, Y, or Z company in the transportation space. We try to be as open-minded as possible. Like, we didn't have a specific mandate around breastfeeding and maternal health, but we have an interest in the future of work, and Milk Stork kind of fell in our lap in that way. And so I think what's most exciting for us is just kind of waiting to see what kind of comes our way, because there's just so many amazing entrepreneurs out there who are coming up with incredible ideas that we could have never conceived of in advance. And I just feel really lucky that I get to invest in these companies with Julie, who's really my best friend. And it's such a nice thing to come to work every day and, you know, have someone waiting for you who's an awesome partner and a really trusted partner. It's great.
Awesome. Well, Clara, thank you so much for joining us today for Sloan Alumni Online and for telling us more about your work with the Urban Innovation Fund. No question, the breadth of impact that you're having in the world is something to be commended. So thank you. I want to thank all of our viewers for joining us. And to keep this conversation going over social media, you can use the hashtag SloanieChat. Following this event, you will receive a survey via email, as well as a link to the recording. So please fill that out and let us know your feedback on this session, as well as on our ongoing lineup of webinars. As always, you can reach out to us at MIT Sloan Alumni Online. Thanks for joining us today. And thank you again, Clara.
Bye.